Hi guys, this is Ruby with MRB Financial. Thank you so much for joining us on this beautiful Monday. As always, please don't forget to share our medias with your friends and family, subscribe, like our content to let us know if this is something that you know is adding value to you. This is helping us bring education that means more to you. So the more that you socialize with us and let us know, if this is helpful to you or what kind of topics you want to hear, that helps us bring more value to the table for you. So for today's topic, we are going to talk about a W-4 form. What is this form and why is it important now? Um, as we know, tax season generally is over by April 15th, but in 2020, due to the pandemic, um, everything has been shifted. So the tax deadline has been moved to July 15th. Right now, one of the big things that we're seeing is, generally we see it at the end of the season and we're rushing, but this year's kind of different. So one of the things that we just see ourselves educating a lot of folks on is paying the proper taxes at the proper time so that you don't incur penalties. And then you're not dreading to pay, your tax bill. You let it go 1 month, and then before you know it, it becomes this big problem that you don't want to see, and there's just this big monster that you don't want to have to slay that day, right? So that's what we're going to talk about today, that W form and then just when to take it into consideration. So I'm going to flip over and I'm going to share my screen with you so you could see this form, see what it looks like. I'm going to share some websites as well, some links to the IRS as well. Please excuse my office buddy. As you can see him. So if you see a tail, you see what's going on there. So with that said, yeah, we're going to go ahead and share the form with you and just kind of walk through it. So at what point would you use this form? When does this form come into play? So if you are entering the workforce, you're 16, 17 years old, they give you this form and, they give you this fancy packet. Your HR department or your payroll department, they give you, if you want benefits, whatever a la carte benefits you want that your company is offering. One of the forms or two of the forms that are in that package are your taxes. How do you want to pay your taxes? That is the form that we're talking about today. That is the first time everybody here in the US sees the form, their very first job. I don't remember now, it's been so far from me now, but I could think of my daughter when she started. She came to me and she was like, hey, I have this paperwork from work I need to fill out. Well, I helped her do that. I don't know if that's the average home, where kids come to their parents are like, hey, they come for your guidance on how to fill things out, or they might do it on their own. They might make some errors on it. They might not pay it properly. So those are the kind of errors that we're trying to avoid. The other time you would see this form is when you are switching jobs. You're starting a new job, you need to fill out this form again. The times that you should see it, but you don't see the form, is if any life changes have happened in your life. Your HR department, your payroll department, they don't know your personal life unless you tell them. So if you got divorced, well, that's going to change your status from, married, however you were filing. You're going to have to change that to whatever your new status is. Are you single now? Are you a head of household now? Did you gain dependence? Did you lose dependence? Stuff like that is the time that you should be refiling this W-4 form. Any other life changes, like you had a baby, you got married, time to update that form. Anytime a big event happens in your life, just how you have to update your insurance policy, just how you have to update your social security number, or stuff like that. Think always the tax system always also has to know how your life has changed, because you need to pay the appropriate amount of tax. So that big bill that you get at the end of the year, or that big refund that you get at the end of the year, is affected by these changes that are or are not made. If nothing changes, obviously, while you have your children at home, once your children get to the age of 17, 18, that's when you're going to start seeing changes as well on your taxes. So that's when you might want to make some changes on your W-4 at work, because you are no longer getting the maximum tax benefit if they're over 17 years old. So I would also consider making changes. Think when your kid is starting to go to college, taxes will definitely change for you. When they move out of your house, your taxes will definitely change for you. So those are all the scenarios that I could think of when it comes down of when you should be, looking for this form. And then as far as how you go about it, your employer should have it. You could also go straight to the IRS website, which is the links that I'm going to share with you today, to get the most up-to-date form. They just updated them in 2020. So those are the links that I'll be sharing with you. So you would go ahead and fill out this form according to your situation, hand print it, sign it, date it, and give it to your payroll department or your HR department. Every company is different, so that's for you to figure out whoever handles your file, your paperwork at your job. Give them the form so they could go ahead and make the updates. Depending on when you submit this form, and depending on the time of the year, the time frame, the reason why you're changing the form, they all have a deadline of how long your employer has to update their records. Some of the reasons are immediately. Some of them are like, oh, you can make it effective as of next month. The first one that I could think of is you had a baby. They should be able to update that right away. It should make a difference, and it's going to affect right away. But like, let's say you got divorced, or any other situation that's not like somebody being born, there's at least a 30-day minimum time that your employer has to make a change. So don't be surprised if you submit it for any other reasons than that, and they're like, okay, you know what, it'll take effect as of next month. So that's that. Once they put it into the system, the IRS will go ahead and start taking out whatever differences in taxes is out of your paycheck. So you should be able to start seeing that. Then the next time around you need to change it, it will be the same process, or who knows when that's going to be. So always check, with the IRS website, your state website, or even your employer. They're, the best people to go to. Other times where you may want to also make a change is if your spouse has gone from being a W-2 to a 1099, so that you could pay more taxes through the W-2 or the highest paying job, you could say. So the rule of thumb is go to the highest paying job. Let's say that is the W-2. You would go ahead and fill out a second page, which I'm going to go ahead and go into that so that it makes more sense. I'm going to go ahead and share my screen at this point. Okay, I think you should be able to see my screen now. And I don't know if you could see this or not. All right, there it goes, it disappears. So the form is, this is the IRS simple W-4 form. As I was saying, you would go ahead and fill out the tab with all of your information, with what your filing status should be. If you went from single to getting married, then obviously you would go from single to married filing jointly. A lot of people do get have questions about when or why should you go married filing jointly versus married filing separate. There are special rules to married filing separate. So generally speaking, 90% of the people go to married filing jointly, but there are rules as far as being separate. One of them is that both of you must live in two different homes. You cannot live in the same home married filing separately. That's the main one. There has to be a special reason as to why you're choosing to file this way. Do look into that. I'm not going to focus too much on it because we're talking about the W-4 today. So most of the time, like I said, 90% of the people are going to go from single to filing jointly. Let's say that you got divorced. Well, you would obviously go from married filing jointly to, there are rules where you do go married filing separate. That's when you start going through the divorce process. Again, look into the time frame because it's got to be within, I believe, a 6-month period. But please do fact check me on the IRS website. So that's the time where you would actually go to that level, or you would go to single, or you would go to head of household if there are children involved. As far as when you're going through a divorce process, be sure that you do talk to a tax representative so that they could help you on how to do this right from the first time and that you guys don't get yourselves in trouble. So as far as the second part of the W-4, this is if you have, they're basically saying if you have multiple jobs or your spouse works, they are basically saying, this was a scenario that I was talking about that I would rather show you what it looks like so that it made more sense. If you click on the link, it's gonna take you, I'm not doing it right now, I already have it ready, but once you click on it, it's gonna open up the same link and go to this. I just did it separately so that you could figure out what your tax amount should be. So this second part is basically saying, complete this step if you hold more than one job at a time or are married filing jointly and your wife also works. So one of the big things, the reason why they have this here is because one of the big things, one of the scenarios where high income earners see themselves paying taxes is when they're not both paying the right amount of tax. And then the biggest thing, the biggest situation where we see it is when one of the children is going off to college, or they're losing, like as they're losing the deductions for the children, they end up owing taxes. So this is one of the calculators that I would definitely recommend everyone come and play with. It is, like I said, once you click on it, it's very user-friendly. It's going to ask you what is your filing status. Again, single if you have no kids, married, filing jointly. We already went over the married, filing separately, and then the head of household. This is if you are, single with children under 24 and they're in school under 18. If they're not in school, and then a qualifying widower. So let's say I'm a single person. Can someone else claim you as a dependent on their tax return? This is very good for the same scenario where, our grown child is going into the workforce. They would say yes on this question versus a grown adult will say no to this. So let's say I'm going to say no to this, and it's going to ask me for dependents. It's going to ask you for, do you or will you hold a job this year? with paychecks from which federal income tax is regularly withheld. So let's say for you, you have a W-2, but your spouse has a 1099 type job and they don't withhold taxes on theirs. But let's say you're the primary for whatever reason. You would say yes or no according to that, right? So this is the set of questions that you would go through. There's the income and withholding. So you would go ahead and figure, like as you saw, the questions are very easy. You will go through the adjustments, you will go through the deductions, your tax credits, you know, children, retirement, business, anything like that. And then at the end, you would see your results. Well, I went ahead and did one just for kicks and giggles. This one is I believe it's a married couple. Yes, it's a married couple with 2 dependents, with 1 contractor and 1 W-2, making over, I believe I said 200,000 is their income that I put. Yes. Yes, and I separated how much each earner would get. So I put 1 earner would get 100,000 and the other one would get another 100,000. And then I played with the figures to estimate how much taxes they would pay. So here, it gave me the answer of this: if you do not change anything with your withholding, you may owe taxes at the end of the year of this amount. So now how do I use this information? Like, okay, like that's pretty scary to just pay someone like that, right? When we all feel we're getting nothing back in return, right? That's, you know, if someone brought you a car for that, the whole mindset will be differently. But the fact that you're like, man, I got to pay this money and what did I get out of it, right? That's aside from it, but just trying to put some perspective in here. So now you could use this to say, okay, you know what? Well, my paycheck, my W-2 paycheck, you will grab that information and figure that out into your W-4 so that throughout the year, the person that has a W-2 job, let's say they're an engineer, and let's say it's an attorney, or let's say a real estate agent, and they're a 1099 contractor, or, you know, a financial consultant, whatever 1099 type job, a labor worker. Let's say that the W-2, well, you already figured out how much tax you have to pay. So either you pay that now or you pay that later. And by the way, that number that I had, I don't think I got crazy on the deductions. I was just trying to, you know, play with it and just come up with the number. I just went according to that file. So be sure that when you are estimating it, you can think of everything that you could possibly think of to get to the closest number as possible. So then you would come into this form, plug in those numbers and say, okay, you know what? I want you to divide the 27,000 into my paycheck, and I get paid, you know, once a month, let's say. So let's say 100,000 divided by that's by 12. So 27,000 divided by 12 months, that's 2,200 that you will pay a year, right? I'm sorry, a month. So then, is that easier for you to pay now rather than having to come out of pocket at the end of the year? At the end of the year, you're going to end up having your home. You're going to end up having all those extra deductions that you didn't take into consideration because there's no way that you could do that on your W-4 form, where you're going to have all those added benefits, right? But on that tax withholding calculator, it'll walk you through adding some of that stuff, I believe, if you want to. So you want to get as true to that number as possible. If you're the kind of person that just loves a big refund, then add more to it. By all means, you know, add an extra $1,000 if you want, so that at the end of the year, you want to see that extra, you know, $1,000 just to give you the cushion. So instead of paying 27,000, you want to pay 28,000 because you don't see yourself, you'd rather get that money back. By all means, you could always do that. Maybe you don't want to do all the 27,000. Maybe you only want to do 15,000 of it, right? then figure out the numbers to pay the $15,000, and then at the end of the year you pay the other $12,000 or whatever the amount left is. So you would go ahead and sign it, fill in your employer's information, and then here are the exact instructions on what I gave. They are here for you as well. If you have more than 2 jobs, let me open the, if you have more than, hold 1 second. Sorry. Okay. So if you have more than 2 jobs or 3 jobs, you would go ahead and fill that in here. So that's that second form. And then here, it also gives you the bracket of how to figure that number out to help you with the top of the form as well. They do have each one of the filing methods separated for you. So this is what the IRS form looks like. And then this is what the Illinois one looks like. Of course, for your state, you would do one for your state. Oh, perfect timing. If you are in the state of Indiana and you are in the state of, yeah, I believe just Indiana, check with Wisconsin as well. If you have a job where you live in Indiana, but you work in Illinois, you still have to pay taxes to Illinois, and then you're going to have to pay your property taxes to Indiana. Those are things that I have seen with files, like out-of-state files, where the appropriate taxes are not paid, or you're not even supposed to pay to one state, but you're paying to one state and then you're owing to the other state. I have seen those scenarios as well. So be sure that you understand the rules and the laws between the friendliness amongst the tax systems between the states that interchange with each other, like your bordering states within your state that you live in. So you will need to fill out a W-4 for each one of them to basically say the right taxes should be paid accordingly. So I just filled it out just so you could see what it would look like. Again, this is just one person. This is nothing crazy. I was just clicking away. You would go ahead and fill out the bottom. As you could see, the state of Illinois is not as fancy as the federal. So the form, the instructions are also here. And that is the 2 forms. I went through the estimator and we went through the results, and then here's the information about the W-4 form. I'm going to go ahead and attach these links to today's video so that you could go ahead and play with it. Hope this information helps you. So I guess it just brings us to our closing. So as always, this is Ruby Velasquez with MRB Financial. Thank you so much for checking in with us today on this beautiful monthly. Again, please share this with your friends and family. Like we said, we do want to educate as many people as we can. This subject today is actually very common. You would be surprised how much people forget about this W-4 form. And, when it comes down to tying everything together, like, oh, they're like, well, why do I owe? And people tend to freak out. So if we could alleviate some of that stress with our friends and family, I think we would be doing each other a favor, right? So yeah, if you guys have any questions for us, please contact us. We are here to serve you. We are open the whole year, like I said, with everything being pushed back. Our hours are remaining the same. We are open from 8 to 7 p.m. So yeah, thank you so much, and we look forward to seeing you again next week.